In this video, I am not predicting direction. This is not a trade call. I am explaining the current market structure using the daily and weekly Bitcoin CME charts. Because this is a daily and weekly time frame analysis, session concepts and intraday reference candles do not have meaningful relevance here. What matters on these higher time frames is structure, trend integrity, and volatility behavior over time. Before focusing only on today's candles, it's important to step back and look at what has been happening over the past several days and the past few weeks. Over the last few weeks, price has transitioned from expansion into stabilization. The market is no longer accelerating upward, but it has also not entered a clear distribution phase. Over the past several days, downside attempts have slowed down, but upside continuation has also failed to gain acceptance. This tells us the market is not choosing direction yet. It is balancing. Let's start with the weekly chart. On the weekly time frame, Bitcoin remains above the long-term rising structure. However, price is no longer expanding. The weekly Bollinger Bands are no longer opening aggressively. The upper band has flattened, while the lower band is still gently rising. This tells us something important. The trend has not flipped. Support structure is still being maintained, but upside expansion pressure has clearly decreased. Price remains inside the broader weekly volatility envelope. There is no confirmed weekly breakdown and no confirmed continuation breakout. This is a holding phase on the weekly chart. Structure is intact, but acceptance above prior highs has not been established. Now let's talk about the light blue trend line. This trend line represented the prior rising structure. Price has moved below it. However, this break alone does not confirm trend failure. On higher time frames, a trend line break is an alert, not a verdict. What matters is what happens after the break. Whether price accelerates away from structure or stabilizes inside a broader range. So far, price has not expanded aggressively lower. This suggests a structural test, not a confirmed breakdown. Earlier, we also observed a bearish RSI divergence. That divergence did not signal a trend reversal. It signaled a loss of upside momentum. And that is exactly what followed. Price did not collapse. Price stopped expanding. This is a key point. On higher time frames, divergences often resolve through time, not through price. Current RSI behavior aligns with consolidation, not trend failure. Now let's move to the daily chart. The daily time frame provides more detail, but it does not override the weekly structure. On the daily chart, price pushed lower, then began stabilizing inside the Bollinger Bands. Short-term Bollinger Bands compressed and have started to slightly re-expand. This is a volatility signal, not a directional confirmation. The 20-day moving average is very close to price and has acted as dynamic resistance so far. The 120-day moving average below continues to function as a structural support reference. Price is currently positioned between these two forces. This tells us the daily chart is in compression within a higher time frame trend, not in a breakout phase. When the daily and weekly charts are viewed together, they tell the same story. Structure is holding. Volatility is compressing. There is no technical evidence yet of a decisive trend continuation or a confirmed trend failure. This is not a breakout environment. This is not a collapse environment. This is a waiting environment. Higher time frames decide first. Lower time frames follow later, after acceptance is confirmed. Until then, the correct stance is observation, not prediction. Structure decides first. Price reacts second.